International Accounting Standards 40 Investment Property, presented by the Education Soldiers of Fortune, Beyond Tuition. Classification of investment property. The definition of an item of investment property consists of general criteria, the definition of an asset. For any item to be classified as an asset, it must first be classified as an asset. Specific criteria. Definition of investment property. Application is limited to land and buildings used to generate rental income, acquired for investment purposes, capital appreciation. Initial measurement. Cost of an item of investment property is measured at the aggregate to acquire control over the asset, purchase price of the asset, costs incurred to make asset ready for its intended use, the costs directly associated in making the asset operational to realize its economic benefits. The cost of an item of investment property reflects the burden to the entity to make the asset ready for its intended use. It excludes items such as refundable taxes and compensations received for costs incurred, limited to the costs capitalized. Recognition of investment property. Cost of land and building should be determined separately. It is the basis of subsequent measurement of land, historical cost, and building, fair value. The separation of initial costs should be based on amounts specified as per the contract. The contract is silent. Measure cost of land and building separately based on the market value of the components. If the property is used for multiple purposes, rental income and in the production process, then the property should be classified based on the dominant use separately if the property is separately identifiable. Subsequent measurement. Investment property is not depreciated. Economic benefits are not consumed when generating rental income. Investment property is not impaired, specifically excluded from the impairment standard. Investment property is measured at fair value at the reporting date. Fair value measurement accounts for increases and decreases in the value of investment property. Fair value gains and losses are recognized via profit and loss. Reclassification of property. If the fair value of the property cannot be determined for an extended period, then the property should be reclassified as PPE. If there is a change of intended use from generating rental income to being used in the production process, then the property should be reclassified. Reclassification of the property is measured based on the fair value at the date of reclassification. Reclassification of property. Recognition of fair value gain, loss on reclassification. Recognized based on the standard governing the property before reclassification. Investment property, fair value gain, loss recognized via profit and loss. PPE, revaluation recognized via other comprehensive income, OCI. PPE, loss recognized as an impairment loss via profit and loss. Inventory, fair value gain, loss recognized via profit and loss.